Hello everyone, and thank you for attending today. Welcome to the Specialist Trading presentation. My name is Stephen Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with my website and from all the feedback we've gotten from not only our members but from prospective students as well, we are your premier online source for education in trading. So we really want to teach you how to trade. We have courses virtually in every market, from stocks to the Forex markets to the E-mini markets, for day trading, for individual, for overnight trading. So we've got numerous ways in which to teach you so that you can hopefully get on that level where you're a consistent trader, where you're hopefully able to make consistent trades. And now just to give you a little bit of background about myself, as I stated, my name is Stephen Primo. I'm the president and founder of Specialist Trading, and I've been trading for 36 years. I started my trading career on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. As I've stated many times, I traded through the crash, I traded through the bull market that followed afterwards, and I've seen and traded just about everything and anything that you can imagine. Now, what I want to be talking about today is probably a type of methodology or technique which 99.9% of all traders try, and that's trying to pick tops and bottoms. And needless to say, the majority of traders usually lose trading this style of or method of trading. It's because they're really out of sync with what the market's doing, and it'll work for a number of times, but then that one time it doesn't work, you give back virtually everything you've made. This does not matter if you're position trading or if you're day trading. So it is, in my opinion, that most traders really trade incorrectly when they're trying to pick tops and bottoms. So what we're going to be talking about today is the right way to trade tops and bottoms. And I gave this presentation a month or so ago, and we had such just a great response from people that attended and people that wanted to view it again. So we are going over and doing a repeat performance of this particular presentation because I'm going to show you a technique in which you can actually trade tops and bottoms correctly. But before we begin, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using this technique. Hopefully you'll be able to apply them to your strategy as soon as possible. But please remember that we can in no way guarantee that any of the performance results I'm about to show you will be repeated in the future. We're required to show you this, so please take a moment to view our disclaimer. And while you're doing that, for those of you who are new to my presentations, you'll know that I love to answer any questions, and each and every question is very valuable to us, but I like to wait till the very end of the class or the presentation. So at the very end of the webinar, probably in about a half an hour from now, it won't be real long, at the end, once I go through all the rules and show you how to trade tops and bottoms correctly, I will call for a question and answer. But so please, if you happen to have a question or something doesn't make sense, please write it down and we'll get to it at the very end. But if you happen to ask me while the presentation is going on, I'm not even going to open up my question and answer box here, which I have on my platform, so I won't even see your questions being stated. So just wait till the very end. Now this presentation is also being recorded, so if you're interested, at the very end you can ask for a recording. I'll give you an email address or a phone number where you can request the recording of this presentation. You can get all the rules and all the techniques, and we will email it to you. Okay? Now, as I've stated many times before we begin here, when I first started trading as a specialist, I traded the way the majority of people trade, which is basically trying to pick tops and bottoms. I traded that way through the crash. I traded that way through a bull market that happened right after that. And I would do well up until it didn't work, and then I'd give everything back. So for the first year or so of my being a specialist, I had a really difficult time. I just couldn't seem to make ends meet. It wasn't until I came in contact with a few elite traders on the floor, specialists themselves, who turned my way of thinking around, which ultimately turned my way of trading around. And it's not anything advanced or mystical. They really just taught me how to trade with the specialist edge. And the specialist edge is rooted in simplicity. So it's not about coming up with this fantastic indicator or watching tons of markets or the perfect time frame or the perfect system to trade. It's really not about that. That's what people think. I know personally, because this is the way I thought as well. But my mentors taught me to strip away these things which they labeled as useless noise. And they said, Steve, if these things are so useful and if they work so well, how come you're having such a difficult time? And it was true. So once I started stripping away all these things, such as looking at too much news, being involved in too many trading rooms, having too many indicators, I finally started to get consistent with my trading. So this is my goal, and this is our goal at Specialist Trading. It's to teach you how to trade with the Specialist Edge. As I stated, we are an educational company first. Even though we provide all of our members with strategy signals when they present themselves, we email you or we have you go to a special site where you can see what the signal is for the next day. Our goal is really to teach you how to spot these things on your own. We're an educational site, and then hopefully after a couple of months you'll be able to spot all the signals on your own, so you won't need our help anymore. Okay? So our goal is to teach you how to trade with the Specialist Edge so that you'll become consistent, and that edge is rooted in simplicity. All right, so let's start today. Let's start with the right way to trade tops and bottoms, okay? And that simply is to go with them. Now, most people will say, what do you mean go with them? How does that work? I'm trying to trade a top or bottom. Well, let's show you how most traders actually trade. Let's show some examples, and let's first start out with stocks, all right? Now, I'm going to start out with some older charts. Once again, this is a repeat performance. I'll show you some older charts that were a few months old, and then we'll show you some recent charts at the very end to show you how this technique works in any time frame and is very recent and current. All right, here's a chart of Apple going back to December. Now, as we can see, we have plotted the stochastic indicator below. This is probably the main indicator which people like to use, or some type of oscillator when they're picking an overtop or oversold or an overbought type of strategy when they're trying to pick a top or a bottom. All right, and it works very well sometimes, as you can see here. The common method, or the main way in which you're supposed to be using this, is when the stochastics cross over each other, okay, when the slow crosses over the fast and vice versa. This is giving you a sign to either buy or to go short. Now, if we get into the supposedly overbought area, once they cross over, that gives you an indication to go short, telling you that the stock or whatever you're trading is overbought. And conversely, when we get into the oversold area down here below the oversold threshold, it's telling you to go long. So if we use this as applied to Apple at last year, at the end of last year, we see here that we would have looked to gone long right here, and guess what? It would have worked. Had we purchased Apple right here, we would have had a nice run-up. And then once we crossed below the other line, as you can see here, we would have had a nice sell-off in Apple. So it's working pretty well. As you can see, the stochastic then went into the oversold territory again, and the lines crossed. So this is once again giving you a signal to go long. So you would have purchased Apple right here. You've had two good trades. You had a little difficulty with that trade working out, but then ultimately it worked out fairly nice. You got a nice gain going here. And so you're thinking, boy, this is fantastic. I'm going to be a millionaire by the end of the year if I keep trading like this. And we see the stochastics starting to rise and go into the overbought territory again. So once we hope for that area, actually it never happens. And guess what? We go even lower. So we're still holding on to this long position, and we say, well, why don't we double down? It's worked before, and this way I can make back a lot more money once Apple starts to get back in gear. So you purchase some more shares on this oversold signal right here, and you go long, and guess what? It goes even lower. And once more down to the oversold area, and it continues to go lower. So does that look familiar to anyone? Once again, as I stated, the reason I'm saying this is because this is the way I used to trade on the floor. When I first started, I tried to pick tops and bottoms. And there are a lot of people that make very good money trading tops and bottoms, but they are a very small few. The majority of us do well for a certain amount of time, and then we give it all back, such as this example here in Apple. Let's see how this transfers over into the E-mini, because it's just not for stocks and it's just not for day trading. You can, or I should say position trading. You can also use it in other markets and other time frames. As we see here, this is going back to the beginning of the year in the E-mini futures. We have the stochastics plotted once more, and we have the overbought and oversold lines. Conventional wisdom tells us that when we get to the overbought and oversold, we should be looking to sell, as it worked here, and then to buy. And this worked very nicely once again. And then we see here that we got another signal to go short. Why? Because we are now in overbought territory. The lines are crossing, so we should go short the E-mini. It worked fantastic the last time, and it doesn't really work well this time. So we didn't really go up that much, but we're not going down yet, and now we're given another signal to go short. So why don't we go back to the well one more time and go short? We'll double up. This way we'll make twice as much, and we continue to go higher, and higher until ultimately what you made here on the very first few trades, you've given all the way back because the market never decided to go lower. Once again, where Apple was going straight down, now the E-mini is going straight up. You've given everything back. You're watching your account dwindle. All right, so once again, this transfers over into other markets. Let's look at the Forex market. As we see here, we're looking at the dollar-yen for you Forex traders, and right off the bat, we were in this oversold territory, okay? So the dollar-yen has been going up for a while. This was, once again, at the end of December. So it's time to go short off of this signal right here. We're looking at just our very basic stochastic indicator, and we short, and nothing really happens. We're kind of going sideways, but it looks like we're topping, so we go short again off of this second signal. Well, it still doesn't go down. We've got a third signal, so let's go short the dollar-yen one more time. And as you can see, had you done that, you would have continued to short it all the way in this overbought territory, and you would have ultimately probably wiped out your entire account just trying to go short the dollar-yen, trying to pick a top. Once again, the majority of all traders trade this way, and it's no secret why the majority of all traders, regardless of what market, regardless of what time frame, ultimately wipe out their accounts. Okay? So this is not the type of technique we want to be using. Remember, we're looking to simplify our trading so that we can get on that road to consistency. And one of the things that my mentors taught me when I traded this way is that, Steve, there is no such thing as overbought or oversold. Okay? I'm going to repeat that one more time. And I want you, if you can, write that down and place that in front of your computer. There is no such thing as overbought or oversold. This is a great fallacy. We've been sold something here that really doesn't make sense because it's almost similar. This concept is similar to gambling and playing the slot machines. If you play the slot machines, if you go to gamble and you start to play the machines, you'll see that over time, you'll have a few winners here and there. We'll give you the false representation of thinking that you're actually making money. But over time, you will actually have lost money because they have the worst odds in the world. In any gaming or any type of gaming or game at the casinos at all. So there's no way you should be expecting, other than to have some fun and to waste some time, to make any large amounts of money when you're gambling using the slot machines. It's the same way with trying to pick tops and bottoms. Why? Because there's no such thing as overbought or oversold. We've seen markets continue to go sky high all the time while indicators are telling us they're overbought, and we've seen indicators continue to be in the oversold area as the market, whatever we're watching, continues to go lower, lower, and lower, Apple being a good case. So we should not rely on this. So how are we going to trade tops and bottoms then? If we can't rely on this overbought and oversold technique, how do we trade tops and bottoms? Well, the right way to trade tops and bottoms, as we stated earlier, is to simply go with them. Well, what does that mean? How do we go with a top and a bottom? Well, let's look back at the examples we looked at earlier, okay? Let's look back at stocks again in Apple. Now, originally, we had Apple plotted here at the beginning of December. We had the just the very generic slow stochastic plotted. This line here is the overbought line, I believe is at 80 on the stochastic, and this is the oversold, which is 20, okay? It's a standard 14th default length on the slow stochastic. Very simple, very basic, and what we were doing basically is looking for these lines to cross to give us signs of going long or short, whether it's oversold or overbought. Well, we don't want to do that. Remember, we don't want to take advantage of that because ultimately we'll get killed if we keep doing that. Well, here's what we want to do. We want to edit things and alter things just a bit, and the first thing we want to do is add a 50-period simple moving average, okay? So whatever chart you're looking at, regardless if it's a 5-minute chart, regardless if it's a monthly chart or a daily chart, as you see here, always have a 50-period simple moving average in front of you. Now, if price is above that 50-period simple moving average, that means we'll only be looking to go long, okay? If price is below, as it is here in Apple, that means we're only looking to go short. So as you can see, there is no way we would have gotten hurt trying to pick a bottom in Apple because we wouldn't even have considered going long in the first place. So we're only looking to go short Apple as long as price is below its 50-period simple moving average. All right, so we have that concept under our belts. Now how do we use this overbought, oversold technique? Well, what we want to do is we're still looking at this oscillator right here. And what we want to do is look at the areas, since we're only looking to go short, look at the oversold areas, circled in red right here. This is every time where we went into the so-called oversold area. Once we are in that oversold area, look to the corresponding area on the chart and look to find some type of pivot point made, a pivot low made while we were in the oversold area. Okay? And that corresponds to these lows right here. And a pivot low is simply a low followed by a lower low followed by a higher low. So that's this kind of a V formation. And that was formed, as you can see, while we were in oversold territory. Now here is another pivot right here, low, followed by a lower low, followed by a higher low. But as you can see, we didn't underline it because it wasn't constructed in an oversold area. It was constructed while we were somewhere in the middle between overbought and oversold. So we didn't label that. But guess what? There's a pivot area right here that was formatted in the oversold area. There's another one right here and another one right here. So what does this mean? Why are we watching these areas? Well, because once we found that pivot in the oversold area, we're looking to see that it has been broken later on somewhere down the line. All right, so as we can see here, every time we got back to that pivot area, that's where you got some type of a sell signal, some type of a shorting signal. Some were better than others, but that's where you should be going short each and every time, or looking for some type of a short entry. That should be your trigger telling you it's now time to get short. You see how simple that is? And you see how, had you just taken this very first signal, you would have reaped the benefits ultimately and having a very nice move to the downside. Let's see how that transferred over into the E-mini. Now we saw the E-mini was going the exact opposite direction. Well, here's what we were looking at before. At the very beginning of the year, the E-mini was going higher, and it worked for a few times, being picking tops and bottoms, but ultimately we would have continued to short and we would have gotten killed. So what's the first thing we want to do? We want to find out what side of the market we should be on. Should we be buying or should we be selling? The way we do that is by applying a 50-period simple moving average. And as you can see here, the majority of the bars are above the 50-period simple moving average. So remember, the rule is if we are below the 15-period, we're only looking to go short or to sell. If we're above, we're only looking to go long. Okay, so that's simple. So that means we're not even going to consider going short the E-mini according to this chart here. Why? Because price is above. We don't short anything when price is above. It's that simple. This is probably one of the most simplest rules we have at specialist trading, but the most powerful. So as we see, price is above. So now we want to look at those areas, since we're looking to go long, where we are in overbought territory. As we see here, every time the oscillator, the stochastic, went above its so-called overbought threshold at 80, that's where we want to look to find some type of pivot that was formed to the upside. Okay, so here are the spots where we're in the overbought area, and now these are the pivots, so the short-term tops that were created. We have a high, followed by a higher high, followed by a lower high. It was created when we were in the overbought territory. Okay, here's another one created in the overbought, more and more. So as you see, we have a lot of pivots that are created in the overbought territory. And guess what? These are all the areas in which you ultimately could have gone long or looked to gone long, applied some type of structure, some type of strategy to go long once we surpassed the last pivot that was made, pivot high. Okay, so do you see how, had you traded this way as opposed to trying to pick a top, you actually went with the tops and went with the bottoms with Apple, you would have actually made money that entire time. Let's look at the Forex markets. Remember, we saw that the dollar-yen was going straight up. Had we used the standard overbought, oversold type of indicator to go to pick tops and bottoms, once again, we would have virtually gotten killed because the dollar-yen never pulled back, it never sold off, it continued to go higher. So what side of the market should we have been on? Well, we plot the 50-period simple moving average, and the entire time, even though the chart didn't go back far enough, the entire time we were above the 50-period simple moving average. So once again, there was absolutely no reason for you to be shorting or looking to short the dollar-yen. Absolutely no reason. The entire time it's above, you would have been looking to go long. So what do we look for? Well, we look for, since we're going long, we look for areas in which we're in the overbought overbought territory, the so-called overbought territory. And once we find those, we look for short-term tops to be made or short-term pivots. That's where we have a high, followed by a higher high, followed by a lower high. And we only look for the ones that were constructed in the overbought area. Because this is telling us that if we're going higher, we're going to break that overbought area, and we're going to go much higher. So these were all areas in which you could have purchased the dollar yen or looked to purchase according to some type of structure or strategy. Okay? Remember, this is just a technique, but you see how powerful it is. We're finding tops, but we're going with them. We're finding bottoms, oversold bottoms, but we're going with them. We're not in any way trying to pick a top or a bottom. We're just finding where they are by using our oversold and overbought indicators. They're telling us, and then we're just simply jumping on board. Now, those are older charts. Let's look at some current examples, things that have happened within the last few weeks or even the last few days to the last few months. Here's a chart in SNDK looking back at the beginning of the year. Now, we have the standard stochastic plotted on the bottom, and as you can see here, we have the 50-period simple moving average. Now, the entire time since the beginning of the year, we have been above the 50-period simple moving average. So there's been no possible reason to even think of going short SNDK. Absolutely no reason. So what are we looking for? We're looking for these areas where we are in supposedly overbought territory, and then we look for the pivots that are formed, which were all right here in that dark green area. And you see how each time one of those areas was violated, we could have jumped on board to buy. And you could have been long the entire time, roughly starting at about 50, all the way up here in SNDK up until the middle of April. Now, if we look at the E-mini, let's look at an intraday chart where we were looking at a downward move. This was last week, actually, on a 1,000 tick bar chart. We get a lot of signals with this particular type of technique if you're looking at tick bars because you can see a lot of more movement. There's a lot more volatility. And as we see here, in the morning going into the afternoon, we finally crossed below the 50 period. So this is telling us that we're only going to be looking to go short the E-mini. And we see these are all the areas circled in the so-called oversold territory in red here. So at each one of these little small bottom pivots were made, we would have put a dark red line here, and each time it was violated, that could have been your signal according to whatever strategy you're trading to go short. See how simple that is. Now, had you done the reverse and traded the way the majority of traders would have traded, you probably would have used one of these oversold areas to go long and then tried to double up your position or maybe even triple up your position and ultimately given it all back. By this time down here, when the E-mini was bottoming out for a while and getting ready to go back over the 50-period simple moving average, that's probably where you would have exited for a major loss once the E-mini started to go the other direction. This is what most people do. So that's a perfect example of how it's simpler and easier to be in sync with the market as opposed to trying to pick tops and bottoms. Now, this was this morning, actually in the overnight session. I took the snapshot this morning prior to the market opening. A lot of people say there's not a lot of action, but there actually was if you're using this technique. Prior to the market opening, we were above the 50-period simple moving average, roughly about 3 or 4 hours before the market opened. And as we could see here, the same technique when we were in overbought territory, we looked for these pivots that were made, and you could have purchased all along here or applied some structure to go long and had a very nice gain prior to even the market opening in the regular session. Okay, we had some very nice setups here to go long the market prior to the opening bell even signaling. Now let's look at a signal in the Forex markets, the British pound. Since the beginning of the year up until now, the British pound has been pretty much selling off. A lot of people have said, boy, according to economic conditions, we should have hit some support. According to the news, the British pound should not be going this low. We don't care about that stuff. Remember, I used to follow all that when I was on the floor, and I didn't have anything to show for it. What my mentors taught me was just view and listen to the most important thing, which is the chart in front of you. If the chart continues to go lower, that's what it wants to do. Who cares about economic conditions or what the pundits are saying on TV or in the trading rooms? So the British pound continued to go lower and lower as people call for it to be bottoming out. But as smart, savvy investors, you would have tried this technique and said, well, every time we go into the so-called oversold area, we make some type of a low or a pivot low that's your area to go short. And look at all the times you could have gone short the British pound all the way down. Remember, you have to apply some structure, but these are all ways in which you could have entered or looked for entering short the British pound. So, as my mentors taught me and what I hope I can convey to you, please, if there's one thing you remember from this presentation or from anything I've taught you, there is no such thing as overbought or oversold, okay? There is no such thing as overbought or oversold. Any market, any time frame, regardless of stock, forex, or e-mini market, can go as high or as low as it wants to. And if you try to pick a top or a bottom, it may work just like the slot machines may give you a few winners from time to time. But over time, you'll have nothing to show for it. You will ultimately give everything back. So this is not a way to trade towards consistency. This is actually being very consistent if you want to lose money. So the best way to go or to trade tops and bottoms is simply to go with them. So what is the lesson learned? Never ever try to pick tops and bottoms, okay? As I've stated and probably over-repeated myself, the worst thing you can try to do is to try and pick tops and bottoms. It is really a recipe for disaster. And the only reason I say this is seriously because in my beginning of my trading career, I tried to trade this way. So I'm speaking from experience. I know how difficult it can be trying to learn how to trade. I know I've been there, and I know exactly how you felt. So one of the lessons learned to me, taught to me, and which I try to teach all of my students, is I learned that you should never, ever try to pick a top or bottom. All right, so points to remember that. And as I said earlier, this is a repeat presentation because so many people love this presentation I gave a couple of months ago, and they've been dying for me to repeat it again. But really, honestly, the most important things, rather even than the technique I showed you, is that these are not, I repeat, these are not strategies. Okay, a strategy has a lot more pieces of the puzzle involved in it. In other words, you also need to know about stop placement. You need to know about exit signals. Where are you going to get out? You also need to know about money management. How many shares or how many contracts should you be trading? These are all extremely important things you need to know prior to using any type of technique, even the one I just showed you. The technique I just showed you is something to apply to a strategy, but it is not a strategy itself. So please, I do not want you to, eyes light up and start trading this tomorrow and say, boy, I know exactly how to trade now. I'm going to start doing this, because you need to have other information such as stop placement, exit signals, and money management also included. And they need to be all part of the strategy, and they need to fit like the pieces of the puzzle so that everything's working. The unfortunate thing is that most people that come to my presentations, some beginners, even some novices, will say, well, Steve, I don't have a strategy. I don't have a specific technique, or the one I was using, it tries to pick tops and bottoms, or it doesn't work at all. Well, don't worry. In fact, this is what we do. If I can take just a few minutes to show you what we do at Specialist Trading. As you can see, this is my homepage. We offer courses, what you're looking for, structure with all the stops, with all the exit placement, with all of the money management, in not only stock trading, but e-mini trading and forex trading as well. In fact, each one of these courses comes upward of 10 specific different types of strategies, along with all different tips and techniques such as I just shared with you today. Now, here's what we're doing. We're promoting one of our best strategies that fits virtually all of these markets, the forex, the stock, and the e-mini markets. This is strategy number 4. And the reason why we say it's probably one of our premier strategies is because it works so well in all different markets. But there's a few different changes it can be applied to different markets. So each specific type of market comes with its own different strategy number 4. Now, if you purchased all of these strategies individually for each specific market, it would cost you close to $2,100. But as an attendee today, for coming to hear me speak and for being interested in specialist trading, we're discounting this down, almost about $1,200 down to $895. But this is for a limited time only. So it's a combo package. For $895, you get all 3 of these. Now, a lot of people say, well, I'm not familiar with strategy number 4. How does it work? Well, let me just show you some actual signals that our members were able to take once they learned how to trade strategy number 4. These are actual strategy number 4 stock signals. We applied the stock program to Facebook. As you can see here, these are actual signals that were generated using strategy number 4. So you can see 2 signals to go long and 2 signals to go short for the first part of the year. This is just one stock. Now, a lot of people have noticed in the news, EW was in the news lately. As you can see, going back to the beginning of April, strategy number 4 flashed 4 very strong sell signals in EW. Okay, and we had some minor movement on it. Didn't seem much that happened after we got short. But for those of you who are, sticking with it, as you can see, look what happened just a few days ago. I believe the EW is Edwards Life Sciences. It was down 22% on some bad earnings report. All right. Well, the funny thing is, no one called us from the company and told us that their earnings were going to be terrible at the end of April. So that wasn't why we got short. The strategy is so simple but so powerful, it spotted in advance that you should be shorting EW prior to any news coming out. And strategy number 4 is basically just pattern recognition. So that's what we're looking for, along with some proprietary indicators that we use. Now, strategy number 4 for E-mini also flashed some signals at the very beginning of the month and the 5th of April. As you can see here, this is a 5-minute chart where if you're a day trader, wouldn't you like to be going long these signals here, racking up these nice, small, but consistent gains in the E-mini? Now, also, if we look back to last week on the 17th when we had a sell-off in the E-mini on a 5-minute chart, the E-mini, the strategy number 4, I should say, also gives signals in both directions. These are some really nice sell signals as well. And then lastly, the Canadian dollar for the Forex strategy number 4 course. As you can see, just one signal looking at that, but look at the nice move you had. Basically, you would have made some really nice gains here had you just taken that one signal on a daily bar chart using strategy number 4 for the Forex markets. So each one of these markets comes with its own specific way to trade strategy number 4, and we teach you that in the course. Remember, as a special discount for all the attendees today, we're providing you with a combo package. If you purchase these individually, it would be close to $2,100 just to buy these on a separate basis. But if you wanted to get the combo today, we're discounting it nearly $1,200 down to $895, and you pick up all 3 courses using strategy number 4 for the E-mini, for the stock market, as well for the Forex markets. Remember, this comes with instant online access. You don't have to wait for anything to be shipped to you. You get detailed instruction, and anyone who's attended my presentations, as you saw today, you see how much attention I give to instruction. I really want you to understand and to learn what I'm teaching. Now, in each one of these courses, I teach you exact entries, exits, and stops. We also teach you how to trade it conservatively or aggressively. It all just pertains to which type of trader you are. If you're more conservative or aggressive, we fine-tune the method to fit your needs. We give you 1 year of trade signal alerts so that you'll know when a signal is produced, but please remember, we're an educational company. You're probably going to be able to spot these signals after the first month or so on your own. This also comes with 1 year of weekly trading lessons, webinars such as I just gave today, 1 year of different lessons, tips, and techniques that I give you. And probably the most important thing is you get direct access with myself. I give you my personal email address so that you can contact me virtually at any time, and I'll answer any questions you may have. You don't understand why a signal was or was not generated. Remember, if you purchase these individually, if you decided you loved one and wanted to get another one, it would cost you close to $2,100, but we're discounting the combo down to $895 just for a limited time only for all the attendees today. Now, as I promised, we are at the portion of the presentation where I'll take any questions. But please remember, if you want to do some more exploring about specialist trading, you can also go to our sister site, which is protraderstrategies.com. We also sell our strategies on that site as well. And then you can speak to Don Jans. He is our senior trading consultant. You can contact him at donjans@protraderstrategies.com or call us directly at area code 310-492-5393. Now I'm going to open up the question and answer portion here. So I just first of all want to thank you for waiting to ask any questions, and I'll try to go through them as quickly as possible. But thank you so much. I see we have a lot of people here. I see Henry from Sweden. I see other people, some other members, and I want to thank you all for attending. And someone has asked, will this be recorded? Yes, this session is being recorded. So if you would like to, have this recording made available to you, simply email Don Jans. You see here the address provided, and we will email the recording to you. Or if you want to call, you can call the number directly, and we'll have it sent right to you. One of the main things I want to stress, though, as I talked about tops and bottoms, while someone may be someone may be trying to ask a question, is that, as I stated, I try to trade tops and bottoms. I don't want to give you the impression that tops and bottoms will not work from time to time. They will. I traded in the past with tops and bottoms, and guess what? Some of my trades worked very well, and I had some really nice months trying to pick tops and bottoms. But as I stated, that's not the problem. The problem is they will work until they stop working. And then when trying to pick a top or bottom ceases to work, that's when you get in trouble, because most of the time you'll give everything back. You'll give everything back. You'll go into a series of losses. And then pretty soon what you made in a few trades will all be gone in one or two as well. So that's the real problem. It's not that tops and bottoms never work. It's that over time you will give back everything you made. So the point is, we don't want to get involved in that type of trading because it's not consistent. Remember, our goal is to teach you how to trade with a specialist edge, keep things simple, and once you keep things simple, you'll get on that road to consistency. So that's what we're really trying to instill in all of our members and also in all of our attendees today, people who are coming to our presentations. Okay, are there any questions? I see that no one, either I have answered everything entirely, or my microphone isn't working and no one can hear me. But honestly, if you have a question, now is the time to ask. Otherwise, just simply email us for a copy of the presentation. We will send you the recording. Or remember, a lot of our attendees happen to come up with questions once we've concluded. That's fine. Don't worry about that. You can always email us. You can always call that number, and we will answer any question that you may have. I see we have a question from Don. He says, do you ever buy puts to protect long positions? That's a very good question, Don. He's asking, in other words, if we pretty much just hedge our bet by buying options. And no, I don't. This is not an option course per se. We don't really give a lot of option strategies. The only thing I can tell you is that some of our methods, especially some of our ETF methods, work fantastic with looking at ETFs such as the spiders or other issues, and they have some really nice swing moves. So we will tell members every once in a while that it's perfectly admissible just to buy a long call instead of trying to purchase the stock. But in terms of using options to hedge ourselves, no, we just use a standard stop, Don. That's just basically the way, once again, we try to keep things simple. So I don't have anything against that, but we don't really teach that or go into that type of methodology. Okay. Good question, though. Any other questions while you still have me? Once again, our senior trading consultant is Don Jans. If you happen to come up with a question once we've concluded or are very interested in taking advantage of that special combo we have, be sure to give Don a call. You can reach him at area code 310-492-5392, or you can email him at johnjans@protraderstrategies.com. We'll just take a few more minutes for questions here in case anyone has decided. But remember, I really strongly urge you, if you're very interested in using a technique that has consistency and you really want to get on that road, if you look at your trading and you see you really just can't make ends meet, I would really strongly suggest taking advantage of strategy number 4, either the combo, or you can ask about purchasing individual strategies, because it's probably one of our premier strategies because it works in any time frame in any direction. So regardless if you like to trade stocks intraday or if you like to hold positions or even weekly or monthly charts, you will still see signals in all of those different time frames. Okay. Tim is asking, do we need to email Don Jans to obtain a copy? Yes, just give him an email and tell him you're requesting a copy of the presentation on the 25th of April, and he will send you a copy of these. Don also asked, would you buy puts rather than short a stock? Personally, Don, that's just a personal thing. I have nothing, once again, against buying puts, but I would rather short the stock. And the reason being, I used to trade options a long time ago, but the reason being is with options, you have to be, or I should say with stocks, you only have to be right once. In other words, you just have to be right whether the stock's going to go up or down. But with options, you have to be right twice. In other words, you have to be right that the stock, let's say you're trading stocks, is going to go in your direction, and you also have to be right that it's going to happen within a certain amount of time. And in my opinion, that's giving yourself too many restrictions. There's too many things you have to meet. So I would rather just only have one restriction, being that I hope it goes in my direction. And so that's what we teach, and we teach you ways in which to be in sync with the market. But in terms of, some of our signals, as you saw there in the EW, which was Edward Life Science, it was a good 2 or 3 weeks before it fell out of bed. So a lot of our students either, took a short profit, or they stayed with the trade and ultimately reaped a 22% gain. So it's up to you, but I can venture to say, had you purchased the options at the beginning of the month in EW, and I'm sure you would have lost a lot of your premium holding on and waiting for that long of a time. So that's one of the things why we really trust more just purchasing the stock as opposed to options. Okay, another question. Linda asks, hi Linda, hi, do you only use the 50 simple moving average on the daily chart for this? Yes, I mean, I have nothing against using other types of charts for different time frames, such as a 20 period or a 200 period moving average. It's just that when you use a smaller time frame in the moving average, such as a 20, that's very good, but it's better suited for a smaller move, or things have to happen in a shorter time. It's better suited for intraday trading, as opposed to a 200-day moving average, which is better suited for being on the right side of the market, but for swing or for investing. The reason why we applied the 50 is because it covers, pretty much every time period, every direction. So the 50 is pretty much right in the middle of the road for covering everything. And it really works. I mean, just as a homework assignment for attending today, regardless of what market you trade, go plot the 50-period simple moving average, and regardless of what time frame, and see how well it works. Once price is below, if you only looked to go short when price is below, look how it would have helped you, and vice versa. When price was above, if you had only looked to go long your particular strategy when price is above, look how much it would help you. Remember, we're trying to be consistent. I'm not going to tell you that it works like magic each and every time, but you'll get much more consistency if you apply that 50-period simple moving average, because it tells you the right side of the trade to be on, okay? And go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you lost is because you were out of sync with the simple rule. You were most likely shorting when price was above the 50-period simple moving average and buying when price was below. Okay, so there's your homework assignment. Go back and look at your last trades and see how well you would have done. We have some more questions here. Was there time before the gap to get in, Steve? I don't know what you're talking about. I think you're talking about, are you talking about EW? If that's what you're talking about, I'm not sure. But yes, we had 4 signals before that gap down opening to go short. So you could have applied any one that you wanted to use, depending on which type of a trader you are. If you're a conservative trader, you most likely would have only been in one of those trades. If you're an aggressive trader, you would have had multiple positions and been holding on for a long time. Okay, so it really is up to you. Yes, EW, that's what I was talking about, Andrew. That's a very good question. John asks, what times do you trade? Is it a daily chart? Well, that's a great question, John. It all depends, once again, to what type of trader you are. Now, I go in and out of different markets because, I'm teaching and I'm giving presentations and I'm working with strategies. So sometimes I'll trade overnight positions. Other times I'll be trading a 1,000 tick bar chart. It really depends on what particular market I'm trading at what time. But to most of my students, what I really try to teach them is just to stay fixated on one market and one specific time frame and just apply that, okay? So the only reason I'm jumping back and forth is because I've been doing it for so long, and also because I'm teaching and I have to really know what I'm going to be talking about. But I wouldn't suggest that for other traders. I would say just pick what fits you. I know a lot of traders that get very nervous and uptight looking at intraday bar charts. So obviously that's telling you not to trade intraday, okay? Now for me, I have no problem trading intraday. A lot of other people find daily charts or even weekly charts too slow. There's not enough action. They don't want to wait for a signal. They want to see movement every day. So that means you're a day trader. So ultimately, you must answer that question on your own. There isn't one time frame that fits everything. These strategies work well on all time frames, but you have to decide which one you want to ultimately use. And this is what we teach in our courses. As I said, I'm with you every step of the way, pointing you in the right direction so that you can feel the most comfortable with our strategies. Andrew was saying there was a strategy number 4 14-point winner on the EES that came out on Sunday. Yes, there was. There was. I didn't want to talk about that, but you're right, Andrew. There was. It had a very great signal, and that's using the E-mini strategy number 4. So the reason why is because I know a lot of people will want to know exactly where did you get in and where did we get out. So that's why we want you to purchase the course. And when I start to tell people that, they'll try to think they figured it out, and then ultimately they'll trade the wrong signal and they'll lose money, and I don't want anyone losing money. So I really want you to learn the exact rules by becoming a member. But yes, Andrew, we did have a very good trade, and all the members that purchased strategy number 4 had a really nice trade in the E-mini. So I hope you did too. But not that we're trying to keep anything secret. Once again, if you attend any of my webinars, I always try to give you something free to trade with, as we gave you today. This was a great, great technique, and we even talk about this technique in a few of our courses, but you still need structure. Remember, you need to know where to enter. You need to know where to place your stop. You also need to know money management, and we teach you all of these things. And so it's really a great, great deal if you want to take advantage of this by taking advantage of our strategy number 4 combo that we're promoting here. Any more questions? I see here Andrew's asked a question. I see the real setup is safer. Yeah, well, it's true. It all depends on what setup you're using. We have setups for conservative as well as aggressive trading, but it all depends, once again, on which type of trader you are. Okay? Before we exit one last time, I just want to make sure that you fully see what we're offering here. This is the combo. If you're really interested in it, remember you have a few days to take advantage of that. We're selling that as a package. Usually we sell these things individually, but we're selling this as a package because individually these courses would run up close to $2,100. But this is a great, great deal. As you can see here, the E-mini alone would have just about covered the price of the entire package had you traded that one signal we just furnished for all of our members with the E-mini. Okay, so had you traded EW, which is Edwards Life Science, the stock strategy number 4 course, you would have made much more than that as well. So these are all current signals, and we're not guaranteeing you that every one is a fantastic home run, but we have a lot of really nice, small, consistent trades that really add up. Thank you, Andrew. I really appreciate it. Andrew's a great client and very good trader as well, and I appreciate the kind words. Now, anyone also who is sitting on the fence who isn't aware of specialist trading, or I can totally understand whether you're coming here for the first time and you've never heard of us, you think, well, how valid is this? How do I know it's going to work? I offer you to do a Google search on specialist trading. You can see all of the things that people have said about us, that have said about me personally, and you can see that there's really not a lot of negative feedback. We're not promising you, once again, that every trade works. We're just looking for consistency. 2 steps forward, 1 step back, okay? Now, in closing, I just want to leave you one more time with the information. Should you have any questions, contact Don Jans, our senior trading consultant, or you can call him directly at his phone line there at 310-492-5393. Thank you so much for attending. Look forward to you all becoming members of Specialist Trading, and best of luck in all of your trading adventures and any of your trading methodologies and strategies. We'll see you next time, okay? Bye-bye.